Hello, chart watchers, and welcome to this Wednesday, July 24th, 2019 Chartwise Women's Show with your hosts, Erin Swenlin and Mary Ellen McGonigal. So glad you are joining us here today, and we hope we will see you back every Wednesday at 3 p.m. Eastern. For those of you joining us for the first time today, welcome to the show. And for our new regular viewers, welcome back. All right, before I get into, let me go ahead and look at the market and I'll bring Mary Ellen right in. So I wanted to give you a quick update. As you can see, markets are down as far as the Dow. That was due to Caterpillar, and I can't remember which other stock that came in lower than expected earnings, and it really has taken the Dow 30 way down. And that's what happens when you only have 30 stocks. If two of them are doing poorly, that's going to drag the entire index down. S&P 500 still on a nice rising trend, as is the NASDAQ. Best news though, S&P 400, our mid caps and the small caps are now really starting to take off. And we want to see that because those mid and small cap companies help drive that market higher on a rally. Treasury yields are lower. Volatility index continues to fall. We now have a reading just above 12. UUP pretty much consolidating sideways since yesterday. Gold is up. Had a nice gap up, but is pulling back some of those gains. USO oil continues to suffer, and the 20-year bond ETF TLT gap up, but we are consolidating sideways. All right, Mary Ellen, another show, another week, another show.
Yes, very, very exciting. And as usual, we have a lot of very, very interesting facts that we're going to be sharing with you as we continue to educate with an eye toward empowering. And it's all about the current markets and using history as your guide. So exactly. we have a lot to cover today.
Absolutely. And here's the agenda. We're going to cover really the theme of today's show is that emotions drive the market. And we'll talk a bit about how that is and how to find it and understand it. But Mark Chaikin, he was on our show Monday and he said exactly that. Emotions drive the market. So we're going to talk about that. Then we have what's cooking from data farm to table. We're going to look at some educational stocks. And then, of course, we'll finish with one of our favorite segments. Yeah, that happened. So let's go ahead and get right started with the wisdom of the week. So basically, Mary Ellen and I come up with our short and sweet, what we think is the best wisdom that we can give on the theme of the day. Mine is that we're talking about emotions. And I said, use a mechanical model or system to keep your emotions in check. And we'll, again, discuss more than that about that just shortly. And then Mary Ellen?
Yeah, and as you can imagine, for individuals and certainly professionals as well, when you are trading money, particularly if it is your own, certainly your emotions tend to take front and center. They will take over your decision making. But my wisdom for today is that emotions is what causes most traders to break their rules. So we'll get into that a bit more. And for those of you who, I do have a 4-part series, if you go to meminvestmentresearch.com, that discusses each of these 4 emotions and helps you overcome reacting to your emotions.
Exactly. It's really hard to watch your stock, especially if you watch it every day, which I don't actually recommend if you're more of a longer term trader, but every day can bring a new emotion. And so we really want to talk to you about how you can take that out. And then also to identify it in stocks and other, trading vehicles. So let's go ahead. We're going to look at our emotional map here. And I'm going to hand it to you, Mary Ellen, that you came up with this beautiful graphic.
Yes, this is just a wonderful representation of how a typical trade evolves in reference to your emotions. And of course, you on the left side, you start out, you're super optimistic, your stock goes up, you get excited, now you're thrilled, euphoria, your stock is up 4 or 5%, maybe more. But as most stocks do. We talked last week about rinse, repeat. Your stocks are going to go through a cycle. Their trees do not grow to heaven. So there will be that eventual pullback. And of course, initially you're going to get quite anxious. It's going to turn to fear, desperation, because now you're lower than your purchase point. And at some point down here, most people that are tuning in and paying too much attention to those emotions, they don't have a system in place. They are going to have what's called capitulation, where they sell at a loss. And of course, this is really going to impact your confidence. You need to have confidence in your trading so that you can confidently enter and stay with the trade. And then if they do stay with it as the stock comes back, they feel relief, and then of course optimism over again. And this is a very, very typical cycle for investors. Uh,
Yes. And I mean, we get these questions a lot when we do shows in the morning on Market Watchers Live. One of the main ones is it's really easy to figure out when to get in. It's a lot harder to figure out when to get out. And part of that problem comes down to this, the emotions that you're dealing with when you're trading. So there are a couple of things you can do, of course, to make it better. But, in general, you just want to learn how to take that out by having for me, I'm the tech geek, so I like to have a pretty thorough model that tells me, okay, when price does this and it's doing that in conjunction with that, that's my attention flag, and it's time to reevaluate or just follow through on my model. Because the one thing that I've found, even with myself, is that you hold on to that loser, and we talked about this a week or two ago. You hold on to a loser and you move into that hope area, and you're just hoping against hope that that loser is going to finally turn in a winner, because if I don't sell it, it's still the same. But the problem is you can't trade on hope, and you end up right in that cycle.
Undoubtedly, yes. And this is where technical analysis, of course, comes in. It allows you to set up rules, and so that you can abide by those rules and overcome these very, very common emotions that can take hold.
Exactly. And so that's what we've been trying to introduce with our pink line system. And, I'll show you a chart very quickly here, just as just as a way to show you how you can take your emotions out of your trading. And that, like I said, is to have your mechanical model. You get in when certain things happen, and you get out when other things happen, with the pink and blue lines. So again, I am still perfecting this particular model. I'm right now using the pink line as my entry point and as the exit point, but the exit is in conjunction with that 50-day moving average that we're showing here. This is telling you the trend of the stock. You can see that it's rising, and then it starts to roll over, price does. And so your moving average, is going to start to decline. But that's a way you can follow what's going on with this stock and follow that trend and understand, when you're in and when you're out. So if you're using the pink line to get in, and then you get that rise, now you get this pullback, and you're probably wringing your hands. Oh my gosh, I just gave up all those profits up here. But then it starts to go back up, and it's like, oh, okay, great. And then we get that move below both the pink and the blue. And that's your signal. Okay, it's time. It's time to get out. And you've gotten in back here, and now you're getting out back here. And so you're going to end up seeing, you should see some profits that way. But later in the show, I know we're going to be showing you a couple of something we call a price shock in our business. And it looks a little bit like this. You're going along, everything seems just fine. And then there's earnings, like we were talking about, or in news that kind of moves the stock around, and you can get caught very quickly in one of these big declines, and that's just the risk you're taking when you do your investing. So there are other things that, like I said, that I'm going to move into as far as the tools to help with those entries and exits. And when you have those, it's so much easier. I know, do you use a particular system? I know you have your analysis process that you use, Mary
Mhm.
Ellen.
Yeah, absolutely. And it's all about timing as far as your entry and exit, using history as a guide. I use a proven system that was generated by Bill O'Neill and have elaborated a bit on it with my own overlays. And yeah, definitely that exit. That's what I get as far as my courses. That is certainly one of the better selling ones because you need to have that exit plan so that you don't go into that anxious phase. And I tend to use simple moving averages, some very similar to this pink line, and then this 50-day simple moving average is my line of demarcation if a stock breaks below that. For the most part, I'm out unless the broader markets are telling me that it's a pullback and I'm in a very fundamentally sound stock. I will stay with it. But if the markets are on all four cylinders and the stock breaks the 50-day on volume, for the most part, it has worked tremendously well over many years. That is a sell signal.
Yep, and that's why the blue line is exactly that 50-day simple moving average. I think it is. It's an excellent tool. Just using it can be a little bit, I don't think as profitable, and that's why we added the pink line, and it's got a beautiful name. It's called the
I think
chandelier exit.
right. And what that is, the pink line is definitely your initial warning sign. And for those of you that are shorter term, perhaps you're more nervous as a trader. Again, it's your money, you're trading, it can be very highly charged. That if the stock breaks that pink line, for some, that could be an exit point, and you would be well served. Uh, but for those that are perhaps a bit more maybe further along in their trading and educated, they wouldn't that anxiousness wouldn't override their daily happenings. You can wait for that 50-day break. So
Exactly. And, you're not going to necessarily know exactly when to sell at these tops, but if you can get in at the right time and really, like I was saying, getting in is the easy part, getting out is the hard part. So we'll be discussing that more. We'll be right back with how to see those emotions and move on from there.
welcome back. We are now going to go ahead and take a look at some of these charts and really tune into, well, the ways that you can see the emotions on these different charts. So let's go ahead back and take a look at some of the stocks that we cherry picked, because these are stocks that really have a lot in the way of volume. And we talked about volume on our first show. For those of you that did not see that, I urge you, go back to Chartwise Women, our very first show. We did a wonderful piece about the importance of volume in your trading. And when you see a lot of volume, it is going to indicate oftentimes the fact that there are emotions at play, that people are potentially getting either shaken out or going into a particular stock. So let's take a look at one of these stocks. We can certainly start with Amazon. This is a daily price chart. And what I
Oh, we
wanted,
don't see your screen yet.
alrighty. So let's go ahead and
And then just simply, volume itself. Volume
mhm.
is just a measure of how many shares were traded.
Okay, so we
So,
are
just so you know.
perfect. So this first one is Illumina, ILMN. And what we are looking at here, this actually occurred a little over a week ago. The stock had hit a new high in price. They came out with disappointing earnings results and guided lower for the year. And boy, did that set off some bells and some emotions. Take a look at this huge volume bar on this huge gap down. So a lot of distribution, a lot of anxiety, dismay, a sense that the stock's potential future was really not looking quite good. And we can see when you see that type of drop on huge volume, it is oftentimes a precursor of further deterioration as the emotions, as other traders are looking at this gap down on volume, they're also losing hope, if you will, for the stock, and it will continue to trade a bit lower. So this is, again, that map where you can see the emotions really being played out here. This is a lot of fear going on right now, and the stock is attempting to turn. But let's go ahead and we can take a look at another stock. This is Biogen, and a very similar phenom where this is back in the end of March. The stock gapped lower. Look at that huge volume. The company halted trial for their blockbuster Alzheimer's drug. And again, a lot of fear, a lot of sense that the fundamentals really have shifted and the stock could be in for a lot more in the way of deterioration. So I'm using Biogen as an example because when you see these fear-driven huge drops on volume, oftentimes it takes a great length of time before that stock really rights itself and potentially resumes an uptrend. They did come out with earnings yesterday. The stock gapped up 5%. And look at this volume. So here comes the optimism. The hope is coming back into play here. But you are going to want to have a system because from my work, the stock at 240, it could trade up to this 282 quite easily, but be met with resistance. This is a downward trending 200-day simple moving average, part of my proven system in the sense that it, again, could find resistance. If it breaks up above that, you could very well be in good standing, but we are very early in this process. But again, that volume gap up, we are starting to see hope and optimism with the emotional side. This is Facebook, another daily price chart. This has to do with the regulatory concerns, antitrust. We can see this huge drop. Take a look at that volume. That's that fear, that sense that the FTC is going to come in and create regulatory havoc on the company and potentially reduce their revenue. But what we see is the following day, we see an equally or close to large volume. And this is, I don't want to say it's greed, but certainly it is in institutionals and individuals coming in and realizing that that regulatory concern was a bit overdone. So now we're back in that optimistic phase, that period where investors are hopeful. We're seeing very, very nice volume on the uptick. Again, that first series we did was very excellent on how volume really can be a map for you. Of course, today we're using it more as a guide toward emotions. Amazon is another company that got centered in that antitrust concern. This is a very similar gap down, huge volume. But again, we're looking at the volume on the upside, and this is certainly optimistic euphoria setting in here. Certainly all those good emotions when you're trading. So yeah, those this is your, we're calling it the mapping of your emotions that are quite visible on the price charts.
Absolutely. So I'm going to just take a quick look at those and introduce, which I did last, our first show, is what they call on balance volume. And don't let it scare you the way what it does. So we looked at alumina, right? And we had that price shock down. And again, you know, it's really hard to protect yourself from that, except for doing what my co-host on Market Watchers Live does. And that is to sell before the earnings happen, just to protect yourself. Now, you probably could have a chance of losing out on a big move to the upside if the earnings turn out to be good, but there's a good chance that they might not. So one of the ways you can kind of track the volume, because you've got, you know, so many red and black bars going on here, it gets a little bit more, you know, it's kind of difficult to, you know, view what's really going on with that volume. And so what on balance volume does, and again, it's a I love it. It's a simple tool to understand. And it basically, anytime you have an up day, it takes the measure of volume for that day and adds it to the running total that it has right there. So you can see that when we start getting all these black bars going, your on balance volume's rising, because when the day is up, all that volume goes into a plus on that that number. Now, if you have a big volume day to the downside, you have to subtract the volume because it's a down day, it's a red bar. And you can see that unfortunately, this one it took it way down because, you know, when you add this bar to all of this, it's definitely going to give you a skew, so to speak, on what the volume is, you know, what happened with the volume because you had that big bar and you just get that drop. But these are typical of price shocks, and that is something that you can protect yourself against simply by just not holding on to your stock before they're going to report earnings. And there are some websites you can go to that will tell you which ones are getting ready to report, and that can give you some insight there. And so, you know, you don't want to have to be paying attention to all of this all the time, but it does protect you in the shorter term. You know, if you're going to invest in a longer term picture here, this is the weekly chart. So honestly, once things started to go a little bit south here on a lot of volume to the downside, that was really the time to get out and not really try and play this. It ended up, you know, up and down, had that nice move up there. As soon as it got it past what the high had been previously, that's when it just failed. So it's just something to pay attention to. I think volume is a very important piece, and yes, it totally is a way to map the emotions going on in a stock. So from that, you know, we're talking about one of the ways that you can emotionally keep yourself out, you know, you know, allay some of those emotions. And one of the pieces, as Mary Ellen mentioned at the very beginning of the show, was education. So I know you looked up some educational stocks that were looking good, and you know, I know that there's some volume patterns there that you can talk about. So I'm going to pass that to you.
Yeah, this is our data farm to table segment where we have gone out and reviewed the broader markets, uncovered stocks that were seasonal that look attractive. So with an eye toward continuing our theme of education, because as you educate yourself, certainly relative to the markets, you are going to be able to evaporate and reduce those emotional charged feelings. So this is a educational stock. It's ticker symbol EDU. It's New Oriental Education. It's a China-based company, and they do language training, test preparation, and so forth. But what I wanted to point out to you here is the stock gapped up out of this very nice 3-week base. Take a look at this huge volume. Again, we're focused on that because this is telling you institutions want in, and oftentimes it is a precursor to further upside. This is another area I've done a lot of work with as far as how stocks perform after a gap up in price. I have several courses for those of you that would like to learn more, but essentially a lot of them do go on to greater heights. So EDU is New Oriental Education. Let's take a look at another technology stock. I'm sorry, educational stock. This is Chegg, CHGG. And these guys provide textbooks, and they have been really super vibrant as far as their earnings numbers. The stock this week is pulling back. We talked about simple moving averages. It's pulling right back to this upward trending 21-day simple moving average, which we can see historically pullbacks to that area have been a good opportunity to enter the stock. However, it's important to know that they're due to report their earnings next week. So ahead of earnings, not advisable, as Erin mentioned, to buy stocks going into earnings, just too much volatility, too much unknown. But keep this one on your radar screen. I wrote up about this in the Chart Watchers over the weekend for StockCharts.com, and you can read all about their metrics, their dynamics, what they have going on. But by and large, hopefully you can see there are a number of educational stocks that are really doing well. Most of these names are up more than double the S&P 500 year to date, and they are setting up really quite nicely. This is Strategic Education, STRA. Stock is gapping up out of this base. Look at this huge volume. This is what I was talking about. Gaps up. A lot of people think they missed the move, but indeed it has gone on significantly since then. More recently, it is marking time, really breaking out again of another base here. This is a daily price chart. These guys are due to report their earnings the beginning of next month. Last one on the educational side, Bright Horizons, BFAM. We can see this gap up. Now, this was not on earnings. This was in sympathy for Strayer's big earnings. The stock gapped up. You'll see that where stocks that are in a particular industry will respond to other dynamics among other stocks that are in that same group. Again, continues to advance following that gap up. That's not always going to happen. You are going to want to have systems in place to see whether that uptrend is continuing. But more recently, the stock is consolidating. It's in a back and fill formation period here. That's ahead of, these guys are also due to report their earnings in a little over a week, but setting up quite nicely there. We talked about the fact that volume as well as the price history is really going to provide you with a map as far as how investors feel. I would say sentiment. So
Absolutely. And
yeah.
I could talk about sentiment all day. We haven't gotten there, but it's time to move on to our final segment. I can't believe the show is coming to an end, but it is. Our Yeah, That Happened is about new filters for your pictures and the apps that you can do that. What was it that you saw right away, Mary Ellen? It was a new.
Well, yeah, there is a new app called Face App, and as of last Wednesday, it was the most downloaded app. And what it does is you can put your photo there, and it either ages it, makes you look younger, it changes your sex, and it hit social media like a frenzy last week. And then, of course, this week, Erin, we saw, there you are.
This is a Snapchat filter, and boy, I have to say I love it. It smooths out all the wrinkles, and in this case, I got to be a bunny. So that was
this
fun.
is Erin with the bunny filter on, and realistically, this app is super, super popular. Snap came out with their earnings yesterday, and they had their strongest 3 months in the history of the company, all attributable to that filter that allows people to modify their look. And take a look, the stock's up 17%, and they have, while growth is attributable to that filter, they feel that there is still ample upside growth potential for other individuals to take hold of these filters and change their looks to a bunny rabbit.
Right, exactly. Or I can be a male.
That's right. That's
whatever
always...
I'd like to do. I went ahead and pulled up the Snap chart right now, and yes, there you can see that nice move to the upside. So the question is, when would we have gotten in? When would we have gotten out, based on the pink and blue line system? So, back here we would have gotten out because price went down below both of those, the moving average and the pink line. But then the pink line showed a price moving above that, and coincidentally, it also moved above the blue line. So that's where we would have been in. Now we would have seen the move up here, and that's certainly a nice gain for you there. And then the pullback, but we would have ended up out, or at least reevaluating right here at the penetration of that pink line. Now it didn't get it was still well above the 50-day simple moving average, or the blue line. So a choice could have been made at that point. But for me, I would want to wait until it crossed below the blue line as well before I would leave. So even though you're taking a hit here on the downside, obviously worked out well if you happen to own Snap at this point. All right. Well, the show is already over, Mary Ellen. It was great to have you.
Yes, and I think if we have time, we can mention the Money Show in San Francisco, August 15th. Erin and I will be there. So anyone in the area, please come by. We would love to meet you.
Absolutely. So thanks so much for joining us. Do fill out that survey if you can. And remember, Wednesdays, 3 p.m. Eastern for Chartwise Women. Happy trading.